Let's talk about Tesla. Okay, what was it? More than 2 years ago, you're at Sohn. You pitched the converts.
Converts, yeah.
Where are you with those today? And then I want to talk to you more broadly about that company.
So if you take a step back, right? If I asked you to sort of, attempt to drive a golf ball off the pier here into a teacup and gave you 1 million tries, I suspect that in 1 million times you would not be able to do it. But if you then took somebody else and they were able to do it 9 times out of 10, you'd say, wow, that person is a great golfer. The analogy that I would make is Elon basically did that equivalent. He was able to send a rocket into space, do all kinds of interesting, enormously productive, useful things for the world while in space, and then come back down and land on a boat in the middle of the ocean. The kind of technical sophistication that he has in his mind, that he's been able to apply across his companies, is second to none, quite honestly. So when we looked at Tesla, what we thought was a company at an inflection point that was as close to its version of an iPhone moment. And what I mean by that is a company that had been growing up, taking risks, and had finally found the mass market product that would unlock an enormous amount of product market fit. And that was the Model 3. And so far, what I would say is he's living up to what he has signed up for, which is to commercialize electrification, to commercialize an incredible user experience at a price point that has frankly cannibalized its competitors. And what you see in the results, in my opinion, is a company that is now maturing under all of that demand. And so again, is it the best suited company if you want to drive and observe quarter over quarter precision and performance? No. But if you want to take a step back and take a 3-5 year view and say, where can I compound my money? And particularly with the converts, what's so beautiful is it's downside protected because it sits on top of all the equity and the other debt. And so if you have any concern that there's liquidity issues, or if you have any concerns that the company may have to sell, they get paid first. So to me, it was a riskless option on the Edison of our generation.
But you weren't necessarily comfortable enough with the story to buy the common stock?
The reason is because the common stock is not controlled, unfortunately, enough by him or the insiders. What it's controlled by are a bunch of vulture-like venture and hedge funds, mostly hedge funds, who like to prey on that company. If you look at, for example, the Twitter traffic, or if you look at the forum traffic around Tesla, the amount of hyping or under-hyping, the amount of sniping is enormous. All of that signals to me that it is a market that is out of the control of the founders and the executives and firmly in the hands of financial manipulators.
Well, come on,
so my perspective is buy the bonds, you're protected, and allow Elon to execute.
Isn't the founder and his actions responsible for a lot of what you're talking about?
Well, all I see, frankly, is that he has tried to execute to the best of his abilities. He puts out aggressive numbers. He tries to meet those numbers. Sometimes he misses those numbers. What would you rather have?
Often he misses the numbers.
But that's okay, because in the course of the year or in the course of the 5 years, if you take a 5-year step back and say, what has he promised in 2014 to what is he doing in 2019, you'd be ecstatic. Similarly, if you take a step back and say from 2019 to 2024, let the man do his job, will we be better or worse off as a planet, as a species, as humanity, as consumers? We will be better off.
And no one debates his genius. It's lauded, celebrated. It's the fact that the way he runs his company. You're comfortable with that? If you're an investor in Tesla, you're 100% comfortable with the way he is a CEO?
Yeah.
None of the actions that he's done over the last year or so give you pause at all?
What do you mean? Meaning the Model 3 is an incredible car. I just bought one. It's incredible. I bought it the way that it was.
Funding secured? I mean, what was that?
Okay, maybe he stepped out of bounds. My point is, you're getting caught up in the window dressing. I'm focusing on the main course. The main course is on the table. The choice for you as a buyer or a seller of that stock is, do you want to eat it? If you get caught up in all of the stuff around the edges, maybe he may mistweet from time to time. My point is, who cares? Your job as a smart investor is to separate the facts and the news from the fiction and the noise. And all of that stuff doesn't matter it does not change the fact that tens of thousands of consumers are buying that car faster than they can get their hands on it. It doesn't change that the minute you sit inside that car, your definition of what is expected is altered forever. And you wonder why every other car around you that you ever step in, that you may buy, doesn't have the same things that that car offers. So at the end of the day, whether you like his style or not, his substance is irrefutable.
Sure, but I walked down the street here in San Francisco the other day. I see a billboard for the new Audi electric car that's coming. I mean, competition is coming. If it's not already here, that gives you no pause?
You're right, because I remember all the Zune media players I bought after Apple released the iPod. I also remember the enormous number of amazing smartphones I bought when the iPhone was launched. It's not what people do. You know, it tends to be the case that when you redefine expectations and you have a category leader and you have an indelible brand and a mark that people recognize, the easiest decision, let me be a little pejorative, the lazy decision is to pick the winner and go with it. And in this case, there is a clear winner in electrification. It is done. That die has been cast. And so now the question is, can he build the infrastructure to deliver the demand? And if given time and if given patience, I believe he will, and I vote with my money that he can do that. And everybody that bets against him can do that as well, but at what stake really? Because it's not as if there's no downside protection for the stock. The people who short this company are so short-sighted because the number of companies that would come out of the woodwork, you don't think that Apple, with $200 billion of cash, backstops this company and has a chance to enter a $1 trillion market overnight by buying that business if it gets imperiled in any way? Google, which already tried to buy it, wouldn't try to buy it again?
I'd say it's a risk.
So what are we betting against? We're betting against a cleaner Earth because we don't like that. We like to suck in the carbon monoxide and the fumes from all these cars. We're betting against beautiful flat screens, beautiful ways in which to manage your experience inside the car because we don't like that.
No, we're betting
Why?
against whether he can deliver what he says, the fundamentals of the company. That's what they're betting against.
No, that's not true. People are betting against his style. They don't like his style.
It's not just that.
It is just that.
There's smart people like Jim Chanos. He's a smart investor. He's not betting just on his style.
Jim Chanos makes money once a decade. And while the market rips up, the guy just bleeds money and he's never on CNBC. And every time something works, he's there for 5 minutes. Great for Jim Chanos. Fantastic as a hedge in a portfolio where you have 1% in a short fund. But the reality is, being long equities makes sense. Being long innovation makes sense. Betting against entrepreneurs that are changing the world has never been a profitable endeavor. Why start now?
I'm sure Mr. Chanos is going to take issue with your numbers and some of your comments. And
I'm happy to post my returns against Chanos's anytime.